Hey guys, welcome to another video by Fully Informed Trade, or FiTrade for short. My name is Alex and I'm just going to go ahead and review the markets for this weekend. We're going to go over the dollar index, which is going to be a currency, or pretty much Forex, and we're going to mainly talk about certain names in the stock market. So, without further ado, let's go ahead and get into the facts. Options expiration week is coming next week. Monday, markets are trading. We got some key important names coming out in the markets, primarily in the financial and the tech sector. Names like Citigroup, Charles Schwab, TD Ameritrade, Apple, IBM, Bank of America, Bank of New York, Western Digital, Goldman Sachs, eBay, Morgan Stanley. Some very important names. We got some conglomerates reporting like General Electric, and we have an internet name like Google and Advanced Micro Devices coming out. So those are the main names that we got to watch out for. First of all, dollar index is starting to find some support at around $79, which makes this relatively risky for traders to go ahead and buy into stocks. Even if you buy into stocks, you're going to notice that I'm going to keep on saying the trailing stop, the trailing stop, and the trailing stop again. Let's go ahead and look at the markets. First of all, SPY, the S&P 500 ETF, is starting to go a little bit higher, but you got some really low volume, and volume is definitely going to come back the next following week because of options expiration week. You got a lot of companies in the tech sector and financial sector reporting earnings, and those companies are the companies that were rallying the most throughout this whole entire market rally. And because of that, just because of that, you're going to see a lot of volatility in this market coming into earnings weekend, or earnings week pretty much. Let's go ahead and look at the next chart, which is going to be the Dow Jones Industrial Average. Dow Jones Industrial Average has some resistance at around 11,867. 11,867 is some key resistance level, or key resistance level. You got to watch out for it if it goes above it, which it probably could. Next resistance level would be 12,000, but this market could start stalling out at around 11,867 just because of the fact that the dollar index could find some support and reverse in direction. And you could see the markets react to it, but if it's at the peak of euphoria, sometimes it doesn't. So you would have to see the dollar index rallying for a couple days, and then the stock market would be like, oh, okay, we shouldn't be buying into this anymore, or we shouldn't be buying into the hype anymore. So they're going to start selling eventually. So this is going to be big. This is going to be a really big next couple of weeks. This is going to be the most volatile weeks you guys have seen since 2010 of April. So just be prepared, guys, because this is going to be very, very volatile, and it's going to be a wild ride, up and down, up and down. It's going to be a roller coaster ride, for that matter. Let's go ahead and look at AIG. AIG, I saw this quick inverse hammer in AIG, and at first I was very positive on it. I was like, yeah, there's some great momentum here. Just buy into the hype, and try and sell the news. But right now, the following day I said, hey, there's this inverse hammer, and when you see inverse hammer, you should never be too positive on that market. In fact, you should start to become more negative, and you should have more of a negative sentiment than a positive sentiment. Also, another thing about this market was that there was a quick trade triangle technology indicating even more weakness at around 57.41. Currently the stock is trading at around 53.90. So when I look at the first inverse hammer, that wasn't a time for you guys to go ahead and start shorting. Yes, if you did, you would have made some pretty decent money from near the top. But that's not the point of it. The point of it is to get a basic gauge of market sentiment, and then you wait for some sort of indicator or a trend indicator to point out that, hey, this is starting to get a little negative, a little dicey. And you saw one right there on the slow stochastic breaking below, or the percent K breaking below the percent D. That's one negative indicator, but you also saw the trade triangle breaking below this as well. And that's if you have access to my trading software, which if you guys do, if you guys want it, you guys gotta check it out. I'll give you guys the details towards the end of the video. Let's go ahead and look at the next chart, which is JP Morgan and Chase. JP Morgan and Chase rallied into the earnings anticipation, but people started selling because there is no way for them to sell the following day because of a 3-day weekend, on top of the fact that they were announcing earnings within a couple more hours right after the market closed. If you go ahead and look at the 6-month chart, you have an inverse hammer in play right now, and if there was an inverse hammer in play, chances are it indicates negative sentiment. So negative sentiment is coming back into the financial market as of right now, and that should also lead into a couple more facts into Bank of America, which I will point out later on in this video. You have a good probability of finding some support at around $43.50 or around $43. After all, this trend line is in a slope, and when something's in a slope, chances are the support level will continue to go a little bit higher, and this market will find some support on it for a little bit and then probably go even lower. So there's a great chance of a market correction in the banking stocks again. Let's go ahead and look at another thing, Bank of America. Bank of America is a stock that you could buy into just because there's earnings. Its earnings are coming out in like 4 days, maybe, yeah, somewhere around Thursday or something like that of next week. And you know, you guys get this basic idea that if you're going to buy into Bank of America, my criteria is that you don't hold on to past earnings, you have a tight trailing stop, and you're basically able to lock in your profits or lock in most of your profits on this trade. Also, another key important factor, if you're already in Bank of America and you're in it for the longer term, and you're a little afraid of a market correction, what you guys can do is hedge your position by buying some put options. I've been recommending this for quite a while now. Protecting your portfolio isn't just another part of trading, and if you just every time the market continues to go a little higher, and you know, and after earnings are over, you could just buy a couple put options to protect against the earnings hyped or the sell the news mentality. So you can protect yourself against that, earn some short-term profits, and then continue on with your trading or your long-term investment. So now's not the time to short. If you want to consider protecting your portfolio, not a bad idea. If you want to consider buying into it, be sure to buy into it with a tight stop, or a tight trailing stop, I mean. Let's go ahead and look at the next stock, which is Borders Group. Borders Group reminds me of Blockbuster, except not as bad. Borders Group is Blockbuster. Let's start with Blockbuster. Blockbuster would borrow money to pay off previous loans just to have a ballooning loan payment at the end of the day, just to a point that they couldn't repay it anymore. They couldn't find any more credit, so in the end the company goes bankrupt. Borders Group, not exactly the same story. Somebody asked me, should I short Borders Group, and I honestly have to tell you that this is not a good idea. Now is not the time to buy or start shorting into Borders Group, and the main reason is because the economic catastrophe is already over. The economic or the macroeconomic trend is towards the positive side, so markets should be more positive, or the sentiment is much more positive. Okay, and because of that, as the economy starts recovering, this company will recover along with it, and it has probably absolutely nothing to do with how well this company has done or how good management is. It's just going to ride the next economic wave, and it's just going to, you know, it's just going to ride off of an economic recovery into an economic boom. And when that happens, over the longer term, it's much more smart just to go buy into the stock than it is to short it over the longer term. Over the short term, I can't really recommend it either, because the whole entire market sentiment is still very positive in the overall markets as a whole. And also over the midterm, maybe you could see a shift in market sentiment from the dollar finding some support at around 79. 79 support level is met, pivots off of it, dollar index continues going a little bit higher. That in turn will cause commodities to pull back, stock market sentiment turns negative, and then maybe you can short Borders Group as one of those stocks that are going to be pulling back with the overall market sentiment turning negative. But that's going to be a trade that we can consider a couple weeks into the future. But for right now, over the longer term, Borders Group is a play to take for the longer term if you're a super value investor and can stomach the risk of taking on a high risk value play. Borders Group is one of them, and Borders Group is a company that offers great upside over the longer term. Let's go ahead and look at Apple. Apple is another stock that I couldn't recommend you guys buying into earnings, but I can't recommend you guys shorting prior to earnings being announced either. Once we see a topping pattern in Apple, and a significant one after earnings have already been announced, then I can say, hey, buy some start shorting the stock, blah blah blah. But right now, if you were to buy into Apple, it would be a tight trailing stop and enough to keep most of whatever you make. And also, another key thing is that you've been in Apple for ages and ages and ages. Well, once earnings are announced, once the economic picture changes, or once the picture on the dollar index changes, and the dollar index starts rallying again, then you could take out the opportunity to buy a short-term put option just to protect your stock from devaluation and earn some quick money and pocket that cash for the short term so that you can buy more shares once Apple starts bottoming out at around $310 or something like that. Because in the case that the market has a 5% correction, which it most likely will, Apple is the type of stock that would probably pull back by around 7 to 8%. And if that happens, chances are your support level is right above the 100-day moving average at around $305 to $310. That would be your entry point again in this market. And you could you could just buy more Apple stocks over the longer term with the money you've made off of your hedge in Apple, or either that you could just buy call options into Apple and consider doing a credit spread or something like that, or a covered call credit spread. But honestly, if you're in this for the longer term, I wouldn't really do a credit spread. I would just either buy more stocks in Apple for the longer term or buy some call options if you are willing to stomach the risk of more leverage. Let's go ahead and look at IBM. IBM is another story. IBM has around a 13 PE ratio, and because of that, it is a very good value play. It's just really expensive right now, and considering the cycle we are in the markets, the fact that we're in the earnings-themed, earnings-hyped rally season, what you would do is you would have a tight trailing stop that would keep most of your profits as the stock goes a little higher. But over the longer term, the trend is still positive, but the macroeconomic picture over the next couple weeks could turn into a minor market correction. And when you see a minor market correction, you could either buy some put options. If you're buying at IBM over the longer term, which you want to hold on for multiple years, then what you would do is that you wouldn't sell it and then try to buy in at a lower price. What you could just do is just buy some put options to protect your portfolio, earn some money off the puts, and then take that money and just buy more IBM stocks over the longer term. And that does it for today for me, folks. And if you guys are interested in using the same trading software that I use, please be sure to check out the link below this video. And also on YouTube, please be sure to subscribe to my video. It doesn't take that long. You just have to go to my channel, click on the button at the top left, and you'll be able to subscribe to my channel. If you're on Facebook, tell your friends about me. They might get a pretty cool tip or two from watching my videos, or just learn more about the stock market in general. So please tell your friends if you're on Facebook and YouTube as well. Tell your friends about me, and please be sure to subscribe. Take care, folks, and I'll go ahead and see you all next time.